WSI. This is Good Business San Diego, sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family, your health, and your money. And the following portion of Good Business San Diego is sponsored by Wilsey Asset Management. So Chase Wilsey, Vice President of Wilsey Asset Management, he's with us here today with some thoughts on last week's interest rate cut from the Federal Reserve. And the big question, what may happen next? First, Chase, been waiting on these cuts all year long, finally here. So now what?
Now what's the big question? I think everybody knows that the cut happened last week, but there's a lot of, I'm going to say, confusion, not just from people, but also the Federal Reserve as to what happens next. Right now, we have 2 meetings left in 2025. We have one in October and one in December. The votes, the dot plot is what it's known as, that shows what the Federal Reserve is thinking as we exit the year and what their projections are for rate cuts, is all over the place. As we exit the year, there's 10 people that want 2 cuts, but there's 9 people that want 1 cut or less. So that's a very tight range there. And I'm like, I don't know what's going to happen. It could very easily flip if the data doesn't go the right way.
So what do you make of this? Is this a sign of a weakening economy that we have these cuts, and then furthermore, the confusion as to what comes next? A lot of ambivalence there.
Yeah, I mean, I think the big thing is the data is just all over the board right now, right? You have inflation that's still high, according to the Fed's 2% target, but you also have a labor market that has been softening. So do they need to cut to save off the labor market? But also on the other front, you have the consumer, and they're still quite healthy. We got retail sales last month. Right. They were up 5% compared to last year. And if you exclude gasoline from that number, it was up 5.5%. I like to look at that because gasoline's quite volatile. Yeah. Obviously, if you get a big decline in gas prices, that's going to have a negative impact on the headline number. And the one that blew me away, spending at restaurants up 6.5% compared to last year. People are not going to be going to restaurants if they feel like they can't afford it, if things are slow in the economy.
So these are signs of a healthy economy.
Exactly, and that I think is the big question the Federal Reserve is facing. And we talk about 2025 as we're exiting the year. 2026 is even worse. Right now they're estimating 1 cut in the year, but the problem is you have 3 people that think you're going to have 3 cuts, and you have 2 people that think you're going to get 4 cuts, and then you have some people think no cuts. Maybe one person thinks, 1 cut. I mean, there's a lot of disparity here. So there's a lot of confusion, I'd say, about what's going to happen as we progress here on Fed rate cuts.
And of course, the composition of the board is changing too, with new appointees coming in. And does that further muddy the waters as to what the direction's going to be?
I mean, we did see the new appointee, Stephen Marin. He was, I'm going to say, the most aggressive in terms of what he anticipates for Fed rate cuts. So we do think we're obviously going to get a new Fed chair. That could push rates lower if we get more Fed governors on board that are, I'm going to say, more dovish.
So where does this leave us all now as the average viewer, consumer that's watching this, waiting for that cut, wondering what to do in response to this, and of course what happens next is the big question.
The thing that I think the average viewer, I'm going to say, mistakes a lot of times, when they hear Fed rate cuts, they think interest rates are going to come down on everything, but that's not always the case. The 30-year fixed mortgage, obviously that's maybe the most important thing to most people looking at buying a home. If you look at 2024 in September of last year, the 30-year fixed mortgage was around 6.2%. But what happened as the Fed cut 3 times last year, mortgage rates actually went above 7%.
So there's no guarantee if you've been sitting on this waiting for it, rates are going to come down in a way that's going to impact home purchases.
Exactly. There's no guarantee that we're going to see lower 30-year fixed rates. That is going to be more dependent on supply and demand of government debt. What can happen, though, as a positive is your HELOC rates. Those should come down. Your variable rates, those should come down. I always talk about credit card rates. Those should come down too. But again, if you have a 20% credit card that goes to 19.5.
Right, big savings there, right?
Still not good money. Yeah. The big thing, though, that people need to be mindful of is your savings accounts, your money markets. Right. Those will decline. You might not see a 4% high-yield savings account, interest-bearing account here as we go forward. That might get cut into maybe the low 3s.
Which is kind of nice if we want that liquidity and we stay in cash. We've been enjoying these interest rates, but the further they cut, the more that's going to be impacted, right?
Exactly. The further they cut, the more that's going to be impacted. David Kelly, who's the JP Morgan chief economist there, I really respect him. I think he's got a great pulse on it. Right. He estimates that the loss in interest income for a 1% cut to the Federal Reserve rate costs about $140 billion annually for the economy on money markets. So people are going to lose that interest income. That doesn't even include if you have CDs, you have short-term bonds that are coming due, and you're refinancing those at lower rates.
So wait and see next couple of months and into 26. Who knows, right? Which is why we have you back on a weekly basis to keep us
Things are
posted.
always changing. You know, your guess is sometimes as good as mine is what 2026 is going to look at.
Interesting times for sure. Chase, thanks so much.
Thanks for having me.
The Wilsey Asset Management website is smartinvesting2000.com, and the preceding portion of Good Business San Diego is sponsored by Wilsey Asset Management. A reminder, you can now watch Good Business San Diego on a Roku TV, Apple TV, or Amazon Fire TV. All you have to do is download the KUSI Fox 5 Now app directly to your TV, and it is free to watch. So download that app now and get it all on your TV today. We'll be right back.